Let's pray. Heavenly Father, we are grateful for this morning. Grateful that you woke us up to join in this program this morning. We commit it into your hands that as we start and wait for the rest to join, you would give us clarity and understanding that whatever will be discussed today will be used on the day of accountability to the glory of your name. This and many others we pray through Christ our Lord. Amen.
Amen. Now, so listen, so this consolidated financial statement, the strategies I'm teaching you, take them very seriously. But my students don't fail alpha. Never will I teach a student and will write FR and fail. It never happens. It never happens because consolidated financial statements, I mean, the strategy I used to have you all been part of the previous lesson? Have you all been part of the previous lesson?
Yes, since you started. Yes.
So you will admit that the approach I used makes it very simple, right?
Very, very much.
There is no way a student in my class will write console and then out of 20 marks, you can't get 18. So anytime I train students and they are writing, they are able to make about 18 from console. Then interpretation too, they are able to make about 15. Then preparation of financial statement too, they are able to make about 12. So those three alone will give them their 50 before they think about even ethics and then before they think about ethics and come and think about conceptual and regulatory framework and what do you call it, even standards. They all don't rely on standards, though you have to learn them and understand. But if you rely on standards, you'll be giving a shock because the standards are many. Are you getting the point? And in the exam, so you don't know which particular standards to be examined. Are you listening?
Yes, sir.
So therefore, you have about 30 standards, and they are going to choose just about 5 of them for you. What is the probability that the 5 they will choose, you'll be able to remember them? In fact, even as you are learning the standards and you are going forward, you are forgetting the previous ones. That is not to say it is not important. It is very, very important because you will need it in the standards. You also need it to prepare the financial statements. So it is important, but it is not an area you have to bet your hopes on. Where you have to bet your hopes on is console interpretation, because you know that as for console, is for question 1, 20 marks, it is compulsory the way it is, that's how it is. So if I were you, I'll master it in such a way that no matter what, when I see the question, at least out of the 20, I can get about 18. If I make about 18, or you let me say if you make about 15 over 20 in console, go and make about 15 over 20 from interpretation. That is 30 marks. Then the ethics and conceptual framework, those 10 marks, you make about 5 marks. That's about 35. So you post there 35, you have already passed. So you make sure that within 1.5 hours, you clear that 35 marks. Always take note of this. Look, if they ask you, if you go to the exam hall, this must always be your strategy. This must always be your strategy. During the 15 minutes planning time, they'll give you 15 minutes planning time. So during the 15 minutes planning time, you use that time to look for the theory questions. You go through the paper and look for the theory questions and put your answer down on the question paper. You put your answers down on the question paper. So that's what you do. Then you also identify your best 2 calculations. Identify your best 2 calculations. So when you identify your best 2 calculations, this is what you do. Now, if they ask you to start work, when they ask you to start work, you make sure that the first 20 minutes, you answer your theories. That's the conceptual framework and the rest, which is 15 marks. Conceptual framework and ethics and the rest, which is 15 marks. You answer the theories and make sure you take about 10 marks from there. So within 20 minutes, do that. If you get to 20 minutes, leave it. Don't go beyond 20 minutes. Then the next 1 hour, 10 minutes, that's 35. You share it 35 minutes, 35 minutes. You answer your best 2 calculations. So that will be console and interpretation. So if you answer console, you get about 15. You answer interpretation, you get about 15. What it means is that by 1.5 hours, by the time the thing will be 1.5 hours, you have accumulated about 35 to 40 marks already. You've accumulated about 35 to 40 marks. So then now you relax. Now you pass the paper already, so you relax. So the next 1 hour, you will share it 30-30. 30-30. Then you use it to attempt all questions. So you attempt all other questions. So the standards, if you take it 5 minutes, you leave. You take this one, 5 minutes, you leave. You don't touch it plenty. So you'll be getting 2, 1, 2, 1, petty marks, 2, 1, 2, 1, 2, 1. By the time you see the 15 plus marks you are getting, the 15 plus marks you are looking for, you've gotten it here already. So you see that by the time it will be 2.5 hours, by the time it will be 2.5 hours, you have gotten your 50 plus already. So now you have a last 30 minutes. Then the last 30 minutes, you go over your work. You go over your work. And then you make top-ups where necessary. And then where you've done some work and you think you can make top-up, then you make top-ups. So automatically you pass the paper. This means that your best 2 calculations, you are going to spend about 35 minutes on each. So you must train yourself the console and master it in such a way that when you take a question, within maximum 35 minutes, you should be able to finish. Are you getting the point? Are you getting the point?
Yes.
Yes, sir.
And if you look at the strategy I'm teaching you for the console, there is no way within 35 minutes you can. In fact, I have had students who balance console within 20 minutes. I have students I train privately. None of them spends more than 20 minutes to balance a console question. It don't happen. When I taught them console, never. So it depends on you. You need to learn the thing quick. The strategies I taught you makes it easy. The moment they tell you consolidate statement of financial position, add up your figures. When you add up your figures and you leave them open, go quickly your good structure, your cost of investment, quickly your net assets, then your goodwill, then I start moving and moving. So that should be your strategy. So learn hard as we go on. When we finish this, we'll be going to preparation of financial statements. We'll be going there. So when you learn how to prepare the financial statements, then we come to interpretation. I teach you how to interpret well. I'm sure that those big 3 alone will make the mark for you. Now, when it gets to last minute, there are some standards I'll treat with you. Those standards, I call them the big 6. Every day, at least 2 or 3 of them will come. That's income tax, IAS 12 income tax, IFRS 16 leases, IFRS 9 financial instruments, IAS 33 earnings per share. Are you getting it? IAS 36 impairment. Those standards, IAS 36 impairment, and then government
And
grant.
sometimes 37.
Yes, 37 and government grant. Those are the ones I call the big
15,
6. No matter what.
16
You see,
PPE.
this is what I call the big 6.
16.
50.
IAS
No, you had
16.
mentioned impairment. 36. Okay,
16.
15.
16. That is 16.
IAS 16,
Revenue.
it's not normally examined, but you need it to understand other standards. The big standards that are normally examined is this: IAS 36 impairment. That one, every diet, at least 3 of them will come. So you just master them and take the 3. IAS 36 impairment. Then we have IAS 20 government
20.
grants. Then you have IAS 12 income tax.
Income tax.
Then you have IAS 37 provisions. You have IFRS 16 leases.
And it's per share 33.
IFRS 9 financial instruments.
33.
You see, this group, no, always at least 2 of them will come. Before you have another group of 4. Another group of 4, they to their friends every day, at least one of them will come. You see, IAS 33, earnings per share. IFRS 15, revenue from contract with customers. You see this. Then you see IAS 10, events after the reporting date. Then IAS 21, effects of changes in foreign exchange rates. Effects of changes in foreign exchange rate. This group 2, every diet, at least one of them will come. So when you are learning the standards, you must know how to learn. I don't know who teaches you the FR during the normal class.
Thomas,
Okay, you have all been joining different classes, eh? So
Thomas,
you,
Thomas. At
Thomas,
Tom.
least, yes.
yes. So I'll speak to Tommy, eh? I'll speak to Tommy and Dobia. You should draw your attention to certain things. When you are learning the standards, you should know how to learn them. Within this group, two of them is always dropping. Two is chosen from this group for you. Then the two that is chosen from this group, within this group of four, two, that one, two, this one at least two, this one, two, at least one. So if you master all these standards alone, you are rest assured that out of the 5 questions they'll give you, at least you can solve 3. Are you getting the point?
Yes.
Yeah.
And that three alone is enough to give you 10 marks. So the standards, you just need 10 marks. You don't fight for so much. You just need 10. Imagine you have gotten console 15. You have gotten interpretation 15. That is 30. If you get 10 in standard, that is what? 40 marks. So you are now looking for 10 marks from the whole of ethics before you come to prepare, what do you call it? Before you come to, what do you call it? Standards. So if preparation of financial statement even gives you 8 marks, ethics gives you about 5 marks. You have gotten all your marks. You don't need so much to pass the paper. You must only get your strategy right. Is that clear? So as I teach you, when we are going, I'll draw your attention to. I'm sure when I master you console, I master you interpretation, I master you how to prepare the financial statements very well. I mean, the objective has been made. So let's go. Let's go and start the question. Yes, I asked you to take a particular question. Which question is that?
November 2020, question 1.
Do you
FR.
have the question? Now, the rest of you, I'm not hearing from you. Unmute yourselves and contribute. As for my class, you cannot be quiet. Everybody should unmute yourself and contribute. Faustina, Irene Kuga, Sadat, Yao, all of you, Emanuela, everybody should unmute his or herself and contribute to the discussion. Yes, so take the question.
All
Yes,
right.
November 2020, question 1. Can we go?
Yes,
Can we
sir.
move? It says, statement of profit or loss and other comprehensive income for the year ended 31st December 2019 for Kingdom and Paradise Limited. Then you also have the statement of financial position. Then the requirements. The requirements is prepare the consolidated statement of profit or loss and other comprehensive income for Kingdom Limited Group. And then also prepare the consolidated statement of financial position for Kingdom Limited Group. So your first page, start. Put down the title, Kingdom Limited Group. Your first page, put down Kingdom Limited Group. Then you come and say consolidated statement of profit or loss. Consolidated statement of profit or loss and other comprehensive income. And other comprehensive income for the year ended. For the year ended. What was the year end?
31st December 2019.
31st December 2019. Underline it neatly. I think the statement was in thousands of Ghana cedis. So just do this. Put your thousands of Ghana cedis here. Then start adding items of revenue and expenditure and leave it open. So when you take revenue, you have
Then
125,200
60.
plus
60.
60,000. Leave the bracket open. Leave the bracket open. Now, cost of sales. Cost of sales, there are a lot of treatments in it. So I told you, use double line as the bracket. Double line as the bracket like this. Then 91,600 plus 48,000. Don't close the bracket to like this, 48,000. Leave it open. Then provide your column for the gross profit. Then take the operating expenses, distribution cost, admin expense. distribution cost, open bracket, add them 4,000 plus 2,400. Then administrative expenses. If you write and then the thing is long and you think the space that is left is not enough, add it under it. The paper, if you need it, it will be given to you. So don't squeeze the work. 7,000 plus 3,600. Then provide. Yes. Now before we have what? Finance cost there. So finance cost. Finance cost. Yes. That is what?
400.
400 and 0. So 400 plus 0. Please put a 0 there. You will need to, so that you don't make some mistakes. So 400 plus 0. Now, just before you get to profit before tax, leave one line. Leave one empty line in case there is an associate. Is that clear?
Yes, sir.
So you leave one empty line before you come to profit before tax. Before tax. Then our income tax. So income tax. We have what? 6,200 plus 2,000. Leave the bracket open. Now you come to profit for the year. Then leave one line and go to other comprehensive income. Leave one line and go to other comprehensive income. And the other comprehensive income, you have what? Revaluation gain. Now, revaluation gain is a component of equity. And I told you that every component of equity, you take only the parent, right?
Yes, sir.
Take only the parent, leave it open. Then you get it. So leave one line to here in case there is an associate. You also leave one line there.
3,000
Then
on top.
total comprehensive income. Total comprehensive income. When you finish, leave two lines under it and share the profit. So you leave two lines under it, then you share the profit. Sharing the profit, you come and say profit for the year attributable to. I hope you remember.
Yes, sir.
Profit for the year attributable to. That means we are going to share the profit for NCI and then the equity holders of the parent, right?
Yes.
Yeah.
Close it. Then you also leave one line and share the total comprehensive income. That total comprehensive income. Total comprehensive income also attributable to. Put all your pro forma down first. Also attributable to NCI parent. So you put this down to give you your statement of profit or loss. Then you go to the next page. Then you go to the next page. Then you also start the statement of financial position that Kingdom Limited Group. You go to the next page. Then you also start Kingdom Limited Group. This time consolidated statement of financial position. So consolidated statement of financial position. Put all your pro forma down. Consolidated statement of financial position as at 31st December 2019. So the statement is in thousands, so thousands there. Then you start non-current assets. Non-current assets. Yes, so the first thing is to leave a space for goodwill, which will always be a working, right? Right?
Yes.
Yes.
Goodwill. Then you start adding up assets and liabilities. You are adding only assets and liabilities. So the assets equipment. Write it in full. If it cannot go there, then you add it and narrate. Like this: property, plants, and equipment. Open the bracket and narrate, and then add 37,400 plus 27,800. Then we have 10% loan. 10% loan note. When you open bracket, it's 2,000 plus 0. Then leave 3 lines. Now, before you go to any group, after non-current asset, leave 3 lines before you go to the current asset. Leave 3 lines because other items can come. So just listen to the instruction. Leave 3 lines. So leave 3 lines and go to current assets. The current assets we have what? Inventory, receivables, and bank. Receivables and bank. Yes. Add them up. 8,600 plus 2,400. 9,400 plus 5,000. I hope everybody is adding up.
Yes.
Yes, sir.
Bank is 0 plus 600. Then leave 3 lines and go to equity. You leave 3 lines, make your work very attractive. Then share capital. Share capital in equity, you take only the parent. So that's 20,000 only in brackets. Then all the rest will become working. So we have with revaluation surplus, retained earnings, they are all workings. So revaluation surplus is a working. Retained earnings is a working. The non-controlling interest NCI.
So working.
Interest NCI, they are all workings. Then go to the non-current liabilities. Remember, you are adding assets and liabilities. So non-current liabilities, you can add them. Non-current liabilities, we have 10% loan notes. $5,000 plus 2,000. And go to current liabilities. So use about 5 minutes to do these additions. Use about 5 minutes to do these additions before you start. Trade payables. 6,800 plus 7,200. Bank overdraft. Bank overdraft 3,400 plus 0. And income tax payable. 5,600 plus 1,006. So put this down. Then now the next page, you start your workings. The next page, you start our working. So the workings, if you don't want to waste time, just write all figures in thousands of Ghana cedis. All figures in thousands of Ghana cedis. Then we start our workings. Can we start the workings?
Yeah, we can.
We can.
Yes, sir.
Yes, sir.
Okay, so somebody should start reading for us the footnote and then let's start.
Kingdom Limited acquired 60% of the share capital of Paradise Limited on
Kingdom
1st
Limited
April.
acquired 60% of the share capital of Paradise Limited on 1st April 2019. That's just what you need to prepare your group structure. So you come here, say working one, group structure. So put the period and to answer Kingdom, put Paradise there. Then you say control is controlling your 60%. Therefore, NCR will what? 40%, right?
Yeah.
This is what will give you the 100%. Then write the acquisition date. So the acquisition date is 1st April 2019.
Yeah.
Then the reporting date,
31st December.
31st December 2019. This will give you a period of 9 months, right?
Yes, 9 months.
Now, before you move to working two, do this under it. Under it, determine the number of shares. So you first determine number of subsidiary share. Paradise. Paradise, how much was his shares? What is his share capital? Check the share capital. Paradise was what? 18,000, right?
Yes, sir.
Yes.
So 18,000, but each share is 1 CD, right?
Yes, sir.
So
So 18,000 over 1 CD per share, which will give you 18,000 shares. Is that clear?
Yes,
Yeah.
sir.
Then you determine the parent's control. So you say Kingdom Limited control. Always do this because you will need it. So something that you will need is better you do it here. Kingdom Limited's control. He controls 60%. So that will be 60%
Of
of the
18,000.
18,000 shares.
10,800.
And now you will 10,800 what shares. Are you getting it? So you already know the number of shares he acquired. Are you getting the point?
Yeah.
Yes.
Yeah.
So when you are going to, if there is a share exchange, you will now waste time coming back to this. You have it already. Then we go to working two. I always prepare to do my cost of investment separately for a reason. So cost of investment, yes. Then I continue. The purchase consideration was settled by a share exchange transaction of 2 shares in Kingdom for every 3 acquired in Paramount. So share exchange. They say 2 for every 3 acquired in Paradise. Now, how many shares did he acquire in Paradise? 10,800. Do you see now?
Yeah.
So 2 over 3 of the 10,800 shares. Now, the parent is the one issuing the shares. So you go and look for the parent's, what do you call it? Share price. Then it says the share price of Kingdom Limited at acquisition date was 3 cedis per share. Can you see?
Yes, sir.
Yeah.
So you put that down, then you continue. Kingdom Limited will also pay cash consideration of 0.275 pesos per share on 1st April 2020 for each share plan. Now, that is money he has deferred into the future. So that's what we call deferred consideration. Is that clear?
Yes, sir.
So deferred consideration. Take your time and go and work it like this. Work it carefully. The deferred consideration. Take your time and work everything for the examiner. Don't leave any stone unturned. Now, the deferred consideration, you will first calculate the future value. You will first calculate the future value. So to get the future value, yes, how much is it? The number of shares is what? He bought 10,800 shares, right?
Yes.
10,800 shares. And he said for each of them, you will pay what?
0.275.
He said you will pay what? 0.275, right?
Yes.
So 0.275 per share. Multiply by the 18,000. Let's see. What will he give you? 10,800 times that.
2970.
So that is 2970. Now, this is in how many years' time? In 1 year time, right?
Yeah.
Yes.
So get the future value first. Then you discount it to today. You know, Accounting does not deal with future values. Therefore, anywhere there is a future value, you discount it to today. So discounting it means you multiply the 2970 future value times 1 over 1 plus the interest rate. So go and find the cost of capital. And it went further. It's a Paradise Limited, Kingdom Limited's cost of capital is what, 10%. So 0.1. And he said you pay in 1st April 2020. That's 1 year time. So 1 year. So calculate them for us.
2,700.
The first one gave you what? 21,600. This one gave me 21,600. Then this one gave me 2,700.
Yes, sir.
So when you add the two, you get what? 24,300. I've finished. Then straight away, I'm going to my net assets. Can we move on?
Yeah,
You must all be smart too.
sure.
You must find your future value first. Always take your time and work it for the examiner because he will be marking. Nobody is chasing you. Take your time, do it neatly. Can we move on?
Sure.
Please wait.
The rest of you who are not talking, does it mean you are not contributing? I see
Sir,
Bokwe Joseph, Faustina,
sir,
Frederick Agin,
we are part of the class. We are just following you.
Irene Kuga, Technospark 40, Yao, and the rest. All of you should get involved.
Yes, sir.
Can we move on?
Sir, we are moving.
Yes, sir.
Okay. So let's go to working for my net assets. So working for net assets of Paradise Limited. You take it at date of acquisition. Take it at date of acquisition, then at date of report. Forget about that post-acquisition thing. We'll treat it under it.
Sir, most of the time, this area, if you don't take care, you mess up, you're in trouble.
Where? The net assets?
In that place.
Yes, I'll show you the trick. I'll show you the trick.
You said it's always not necessary to add the
Post-acquisition. It's a waste of time. You will do it under it. I'll show you. You will do it under it.
Okay.
I'll show you an easy
Because
instead of wasting time. I'll show
it
you
helps
an
us to know whether you're getting it wrong.
That's what I'm saying. I will show you under it. There's a simple trick instead of adding
Okay.
one after the other. So go to the equity and liabilities. Then start. Share capital. How much is the share capital?
It's 18,000.
18,000.
So subsidiary share capital, put 18,000 here, 18,000 there. Now the retained earnings and things, whatever you find on the statement, that is the reported figure. So what do we have? Retained earnings.
Retaining 7,000 for reporting.
Retained earnings, reporting is 7,400. Don't waste your time looking for the acquisition. Continue solving. If it is there, it will come by itself.
There's 7,000 now.
7,000. Please, that's why I need 2 to 3 people to mention the figure. You are having a paper, so mention the figure so that you don't pick a wrong figure. 7,000. Then now you start reading the footnotes. Now listen, the strategy we are using here is the one who said you have to be careful. In accounting, this is what equity comprises of. Listen before you don't make a mistake. Watch. Equity comprises of incomes, expenses, assets, and what?
Liability.
Assets and liabilities. This is what is made up of equity. Now, income and expenses, income and assets, they will increase your wealth. So they increase equity. Are you getting it? Then expenses and liabilities too, they also do what? They also decrease your wealth. Are you getting the point?
Yes, sir.
Are you getting the point? So you read the footnote. Every income or asset of the subsidiary, you add it to increase the wealth. And any expense or liability of the subsidiary, you deduct it. Are you getting the point? Are you getting the point? The one who asked the question, I'm talking to you.
Yes, sir. I am with you.
For any income or asset, you add it up to increase the wealth. And any expense or liability, you subtract. So you let this be there, and then let's be going, you follow it. So footnote number 2, it says the fair value of Paradise Limited's net assets and liabilities were equal to their carrying amount, with the exception of Paradise Limited's property, which had a fair value of 8 million above its carrying amount. Now we are stating all this from carrying amount to fair value. Therefore, if the fair value is 8 million above the carrying amount, it means we have to add the extra 8 million. Is that clear?
Yes, sir.
Yeah.
So it's a fair valuation of property. Now, this is an asset. So since it's an asset, you can see here, income and assets, you add. So 8,000, 8,000. But since it's a property, expect that it will depreciate. So read further. It says that this will lead to an increase in depreciation charges in cost of sales of 200,000. That means there is a depreciation, fair value depreciation. Yeah, they've told you it's 200,000. You know, depreciation is reported at the reporting date.
Negative.
All adjustments are at the reporting date. Are you following?
Yes.
Yeah.
Then it went further and said that Paradise Limited had not incorporated the fair value increase in the financial statement. Note 3. It is the policy of Kingdom Limited to value all properties to fair value at each year end. On 31st December 2019, the increase in Kingdom Limited's property has already been recorded. That's the parent. However, a further increase of 1.2 million in the value of Paradise Limited's property since the value at acquisition has not yet been recorded, meaning that since they acquired it, there has been a further revaluation of 1.2 in property. Are you getting it?
Yeah.
So you go the revaluation to 1.2. If they tell you since acquisition, that means it happened during the post-acquisition period, so it will affect the reporting date. 1,200. It will increase it. Are you getting the point?
Yes, sir.
Revaluation of an asset will increase your wealth. Then you put that 1,200 there. Then it went forward. Ivy, Kingdom Limited made sales to Paradise Limited throughout the year. And I told you that in console, the moment you hear one person made sales to another, this is intragroup sales, it will bring what we call unrealized profit. Is that clear?
Yes, sir.
So you leave your net asset, leave a full page for it, then go and work the unrealized profit. So you are going unrealized profit. Unrealized profit. So don't ever think you have to fill all the net asset before you continue. No, keep on working. The figures will be coming one after the other. Who made sales to who?
Parent to the subsidiary.
So parents sold to subsidiary. So let me remember you. Parents sold to subsidiary. And then they said what? And the sales was what? And it had consistently been 600,000 a month. So it means the sales is 600,000 a month times what?
Times
9 months. Which will give you 5,400. Is that clear?
Yeah.
Yes, sir.
So it did these sales at what? At a backup of what? 25%, right?
Yes.
Yes, sir.
25% markup. So you only need to know the sales and the profit policy. Then you ask yourself, how much of the sales is left in the inventory? So closing inventory, how much is left?
1.2.
Read, how much of the inventory is left?
A total of 1.2 million of Paradise Limited inventory at the 1st December has been supplied.
So closing inventory is 1.2, 200. Therefore, the unrealized profit will be 25 over, since it's a markup, the denominator should be 125. Is that clear?
Yeah.
If it's a
Yes.
markup, if it's a
Well,
markup 100, imagine a markup margin 100 markup, you add the percentage to it. So that gives you what? 240, yeah?
yes, sir. 240.
240.
Now, how you treat unrealized profit is you deduct it from the profit of the seller, then you deduct it from inventory. Now, who is the seller here? The parent is the seller.
So it
So
doesn't
you
affect.
deduct it from the retained earnings of the parent, and we have not gotten yet. The retained earnings of the parent will be in consolidated retained earnings. Is that clear?
Yes, sir.
Yeah.
So we are yet to get there, so we leave it. So this does not affect, it doesn't affect our net assets. You leave it, and then you move on. Note 5. Note 5 say At 31st December, Kingdom Limited had a trade receivable balance from Paradise of 2.4 million. However, this did not agree with the equivalent trade payables of Paradise as a result of a payment by Paradise of 800,000 made in December, which did not reflect in Kingdom Limited's bank account until 4th January. Kingdom Limited's policy is to policy for cash timing differences is to adjust the parent's financial statement. Now, this is what we call intra-group transaction. So, 6, we call it current account balances. So, current account balances. They said the man had a receivables of how much? He had receivables of how much?
2,400.
2,400. So you said the person is owing you 2,400, but they said they didn't agree with his payables because he had made some payment of 800. So that payment of 800, it will reduce it, right?
Yes.
1,600.
That means that he was thinking he was owing a payables of what?
1,600.
1,600. So this is the payable. So when they are coming together, we'll go and cancel the receivables and the payables. Then this payment of 800, it will add to their cash. Are you getting the point?
Yes, sir.
That's the clue. So deal with that. Deal with that and let's move on.
Sir,
Yes.
with the 800, the others didn't balance because of the 800. Is it
Yes.
because it was in transit or the person
Yes.
didn't record it well, or
Exactly.
why?
It was in transit. You can listen to the person. They said he paid, but it didn't reflect in the bank statement as at December. It reflected in January. So it's like somebody has paid money to you, but the money has not hit your account yet. So at the time you received the account, the balance in your account was different. So after some days time, when you receive that money, now what will you do? You adjust it by adding it to your balance. Are you getting it?
Yes, yes.
That's what it means. So you see, the reason why the accounting becomes difficult for you people is you always try to chew the processes rather than understanding them in real life. If you understand them in real life, the solution of the question is very, very, very easy. What we are saying is that you sold goods to somebody. So you've recorded in your account that you have a receivables of 2,400. But as for the person, he is recording a payables of 1,006. Why? Because he has sent some money to you through the bank account, but the money has not hit your account yet. So as at the end of December, you were still keeping the receivables of 2,400. Now that he has notified you that the payment has been made, if you are coming together, remember every intra-group item must be what? Cancelled. So you cancel your receivables of 2,400. You also cancel his payables of 1,600. Then that 800 you have received now is now a cash. So you add it to your cash. Are you getting the point?
Yes.
Okay. Yes.
So, please, what if you decide to ignore that intra-group balances since it was going to cancel with each other?
So yes, you can ignore it in the working. But the reason why I don't do that is now, if you ignore it, as you are going to fill the financial statement, it's very likely you can forget. Are you getting the point?
Yeah.
Are you getting the point?
Yeah.
Hello?
Hello,
Yes.
sir. Yes, sir.
But what I do is that every footnote, I work it and present it. So when I'm going back to fill my financial statement, I'll look at my workings one after the other. So every working, I'll look at its effect on the financial statement and tackle it. So that one, I'll not leave anything else. So I'm collecting all the marks. Do you get the point? It's better to present everything so that you see everything clear. Because if you leave something, and unfortunately you forget it, it will cost you. So it's better you present it so that when you are filling the financial statement, you check your workings one after the other, then you see everything. Are you getting it?
Yes.
Yes,
Good. Let's go to the next working. Kingdom Limited accepted a 1 million 10% loan note from Paradise. That means that Paradise issued a loan note and Kingdom accepted and gave him the loan. Are you getting it?
Yeah.
So we call it intra-group loan. So let's write intra-group loan. You see, the said Kingdom Limited accepted 1 million loan note from Paradise. So Paradise issued the loan. So Paradise will have a loan. So Paradise loan. So Paradise has a loan of 1 million, which is coming from Kingdom. Now, to Kingdom, what will it be? If I give you a loan, To you, you've recorded it as a loan, but me, I'll record it as an investment. Is that clear?
Sure.
Yeah.
So it will also cancel out. Meaning that when you go to the financial statement, you will go and cancel 1,000 from Paradise Loan. Then you also go and cancel 1,000 from Kingdom's investment. Are you getting the point?
Yes.
Are you getting the point?
Yes, sir.
Good. When you get to the statement, you cancel 1,000 from Paradise Loan. Then you also cancel 1,000 from Kingdom's investment. That's all.
Bukwe Joseph, your video is on.
Now, please make sure you put off your videos. Early in the morning, normally some people are sleeping in their 90s and all that. So when you join, kindly put off your video. Other than that, you end up exposing yourself. So please be careful.
My
Okay.
video is showing.
Yes.
So that is that. So let's continue. It says goodwill at acquisition. Goodwill that arose on acquisition was impaired by 1 million. The moment you start hearing about goodwill, it means your net asset is complete. So you can now close the net assets. Now, in an attempt to close the net asset, look at this. If I attempt to close, now I cannot close because the retained earnings is not there. Are you getting it? Are you getting it?
Yes.
So
Yes,
I'll now
sir.
come and work. So I'll now come and work the retained earnings.
Profits for the year.
So retained earnings of Paradise. Now, if you look at Paradise, as are the dates they acquired in, when did they acquire it? 1st April 2019. So as at 1st April 2019, we didn't know how much he had. But then when he made profit between 1st April 2019 to the end of the year, 31st December 2019, go to the statement and check his profit. Go to the profit or loss statement, check his profit for the year. What was his
4,000.
profit for the year?
4,000.
So that 4,000, we've operated with him for 9 months, right?
Yes, please.
So that will give you what?
3,000.
3,000. What it means is that there was a certain profit at acquisition, which we don't know. But when we add the result for the year to it, he gave us his final profit. And what is his retained earnings at reporting? His retained earnings at reporting was what? Retained earnings of the subsidiary as reported is 7,000. That's what he said.
7,000. So 4,000.
So there was a certain figure at the beginning, which we didn't know. But when we added 3,000 to it, it became 7,000. So the figure is a work back, which will give us what?
4,000.
4,000. So this is how you work it. So when you get that 4,000, then you come and put it here, 4,000. Are you getting it?
Yes.
Please working 8 so that you remember. Now you close it. So when you close it, this will give you 30,000. And then this will give you what?
Hello, sir.
80,000
Please,
plus
hello,
7,000.
sir,
Yes.
please.
Yes.
Please, sir, the depreciation. Once it was acquired within 9/12, what do we do the depreciation by using the
No,
9/12?
no,
Okay.
no. That's what we should have done normally. But read the question. Read the question there. It said, this for the purpose, it said what? For the purpose of consolidation, this led to an increase in depreciation charges in cost of sales of 200,000 in the post-acquisition period.
Yeah, post.
That means the 200,000
Oh, okay.
is already for the 9 months. Are you getting it?
Okay, post-acquisition period. Okay. I said, okay.
The last time I explained this for you, that if the question says during the year, then that means it's for the full year. So you multiply by the number of months you have operated. But if it says during the post-acquisition period or in December 31st, it means that it's during the post-acquisition period. So it's already covering that period. So you don't multiply by the months. Are you getting it?
Yes,
Okay.
It's like the examiner has authoritative giving you what you want, so you cannot even change anything.
Good. When I finish, I'll explain that to you. Anytime you are reading a footnote and you hear the word during the year or at acquisition, it means that it was there from the beginning to the end. So if it is during the year, that means the whole 12 months. So if you have operated for less than 12 months, then you have to multiply by the fraction. But if the person told you that during the post-acquisition period or in September 2019, that's the post-acquisition period, then that one is already covering your 9 months. And that's why in the realized profit, look at the realized profit. Come back to the footnotes on the realized profit. Let me clarify this. Look at the unrealized profit. You see, Ivy, he said Kingdom Limited made sales to Paradise Limited throughout the year 2019, and it had consistently been 600,000 per month. So that one, he told you that it has been 600,000 per month. So we multiply the 600,000 per month times 9 months. Are you getting the point?
Yes.
Yes.
Are you getting the point?
Yes.
Yes.
But if the question had told you, that he made sales to Paradise, which has been throughout the post-acquisition period, which was 5,000, you not multiply the 5,000 by 80 fraction. Are you getting the point?
Yeah.
Good. So add this up for me. What are you getting here?
34,000.
30 what?
4,000.
So 34,000.
Yes, please.
So 34,000 here. Now, those who have been writing the post-acquisition, this is what I mean. You calculate the growth. When you calculate the growth, 34,000
Minus.
minus 30,000. What does it
Remain
mean?
4,000.
4,000. Then you check that, is there any component of equity in it, revaluation and the rest? Can you see property here didn't increase, but there was a revaluation here, 1,002. Can you see that revaluation?
Yes, please.
Please, can you see the revaluation of 1,002?
Yeah.
Yes, sir.
So this revaluation, is an equity figure. It doesn't affect profit. So because it doesn't affect profit, you take that one out and share it separately. So we say revaluation. So we take the revaluation of 1,200 out. Then the retained earnings will be left with what? 2,800. Then you call that one retained earnings. Is that clear? Is that clear?
Sir,
Yes.
you use
This,
magic.
this is the same as what we were doing. Let me show you this. What you were being taught is this. If you say acquisition and then reporting, just what this. Then you say post acquisition.
Yeah.
So the share capital. How much is the share capital? Mention it for me.
8,000.
So
18,000.
10,000, 18,000, 18,000. Then you
18,000.
put your
That's
dash, right?
yeah.
Retain
Retain
earning.
earning.
As at now, you've gotten
4,
4,000 and
7,000.
7,000. Then you say
3,000.
3,000, right?
Yes.
Then
Yeah.
the next one
Fair
was what?
value.
Fair
Fair
value
value.
property, 8,000,
Yeah.
8,000. You put your dash, right?
Yes,
Then
please.
the depreciation of what? 200. Then you put
100
here 200. Is
minus
that not it?
200.
Mm.
Yes.
Then
A
what's next?
revaluation. Revaluation.
Revaluation of what? 1,200. Then you put here dash. Is that
200,000.
not it?
Yes.
Is that not it? For the
Yes.
revaluation, you've not been capturing. So at the end of the day, this is what you do. You see that when you add all, this one gives you what? Your
2,000.
2,000.
2,000 what? 800,
800.
right?
Yes.
So this is what you have been sharing. Then you take the 1,002 to the revaluation. Is that not it?
Yes.
So instead of doing it this way, you can easily forget. That is why I have calculated all to be 4,000. Then I take the revaluation of 1,002 out. Then I get my 2,800. So when I do it this way, I will always remember that I'm sharing 2,800. Then later I share 1,002. Are you getting the point?
Yes.
Are you getting the point?
Yeah.
No.
Oh, look at this. Instead of subtracting one after the other, it's the same as adding all and subtracting at once.
Yeah.
So what? This is 30,000. This is 40,000.
It's
And I'm saying that instead of
4,000.
subtracting one after the other to get this, it's the same as
34.
subtracting all. 40 minus 30 to give you how much? This one was 30
It
what?
will be 34 minus 4.
34,000. So instead of saying that, you say 34,000 minus 30,000, giving you 4,000. But instead of this 1,002 you've left out, it means you have to leave this out. So you take this one out of it. Are you getting the point?
Yeah. To give you 2,800 stuff.
Madam, do you understand now? Hello, the one who asked the question, speak so that I train you. Hey, madam.
So let's continue.
Good. What I'm saying is that it's like you have this watch. If I have 30, 40, 80, 90, 70, 100, if I'm subtracting this, it will give me 10. If I subtract this, it will give me 10. If I subtract this, it will give me 30. At the end of the day, I'll get 50, right?
Yes.
It's the same as adding all at once like this. This is 110 plus this, 180, 130 plus this, 230. So that I subtract 230 minus 180, I will still end up getting what? 50. So I'm saying that instead of subtracting one after the other to waste your time, you add all and subtract. But when you add all and you subtract, remember that there is a revaluation in it. So you take that revaluation out because it's not supposed to be part of it. Are you getting the point?
Okay.
Yes.
That's the trick. So that one helps you to go faster than wasting your time subtracting them one after the other. So I think now that we've gotten the net assets right, we can go ahead and calculate our goodwill, right? So once we filled our net assets, we can calculate our goodwill. So this working on our what? Now we're at 8. So let's go to 9, goodwill. So working 9, goodwill. Yes, cost of investment.
Investment.
So what is the cost of investment in working 2?
24,300.
100.
We got 24,300. Then the NCI at acquisition. What method did they say we should use? Read.
Fair value.
What method did they say we should use?
Fair value.
Fair value.
NCI is measured using fair value method. They say,
Yes.
for the purpose of this, Paradise Limited shares was trading at 2 cedi 50 pesos each at acquisition. So how much is the NCI shares? The man had 18,000 shares, 18,000 shares, and then the
From
parent bought 10,800, right?
yeah,
So
7,200
7,200 at the price of 2 cedis,
by
50 pesos
40.
per share. So calculate 7,200 times the 2 cedi 50 pesos per share.
Yeah.
That's 18,000, right?
Yeah.
So when you add them, the 100% consideration will give you what? Will give you what? 42,300. Is that right? Is that right?
Yes, sir.
Yeah.
Then you take out the net assets at acquisition. What is the net asset at acquisition? 30,000, eh?
Yes, sir.
So that will give you what? 12,300. So this is the goodwill at acquisition.
Payment.
Now impairment. How much is the impairment?
1,000.
If you read, it said what? The consolidated goodwill has impaired by what? 1,000. So 1,000 out. Then that will give you what? 11,300. Are you getting it? Please, are you getting it?
Yes, sir.
11,300.
So now you can do NCI and share of profit. So working 10. Now, the one who asked why I use that method, look at the advantage. Now, all of you unmute yourselves and watch the explanation here. Now, when I'm sharing profit, because I have done this, what this? It means that I'm going to share the retained earnings for NCI and consolidated retained earnings. Then I'll also share the revaluation of 1,002 for NCI and consolidated revaluation. Are you getting the point?
Yeah.
Yes.
So that's the advantage of doing this. You remember everything. So watch. I'll open 3 accounts. I'll open NCI here. So I've opened NCI here. 11. I'll open consolidated retained earnings. Consolidated retained earnings. Then 12. 12 here. I'll open consolidated revaluation. Are you getting the point?
Yes.
Are you getting
Yes.
the point?
Yes, sir.
Yes,
Yeah.
sir. Yes, sir.
So look at what I'm doing. NCI, give me the opening balance of NCI, the NCI at acquisition, which we did in working 9. How much was it?
Was
The NCI is 18,000.
yes.
Now, go to the statement and give me the parent's revaluation reserves. Go to the statement. The parent, what was his revaluation reserve? Go to the equity. what was the parent revaluation reserve?
12,600.
12,600.
So you also put the opening balance there, 12,600. Then the retained earnings. What is the parent retained earnings? Oh, the revaluation was 4,000. Is
The
the retained
retain
earnings
for
on there?
The retained earnings is 12,600.
So the revaluation of the parent is 4,000. The retained earnings of the parent is what? 12,600. Can you see?
Yes.
yeah.
So I put all of them, their opening balance down. Now stop writing. At this point, stop writing and watch the strategy I use here. I've put all of them, their opening balances down. Now I'll share the profit. So I'll say share of subsidiaries retained earnings. So the retained earnings was how much? When we did it here, we got 2,800, right?
Yes, sir.
Now this 2,800, NCR will get its share of 40% of the 2,800. Then I also go to consolidated retained earnings and give the parent its share of subsidiaries retained earnings. Parent will also get 60% of the 2,800. Are you getting the point?
Yes.
Yeah.
Now share for us.
1120 for NCI.
So NCI is getting 1120. Parent is getting what?
1680.
1680.
1680. Take your time, don't write. Just listen to what I'm teaching and get the understanding. Then I'll also go back. I've shared the retained earnings, but now there is revaluation of 1,002 here. Can you see the revaluation?
Yes.
Yeah.
Can you
Huge.
see?
That's
You
huge.
share that one too for NCI. So I'll also say share of subsidiaries revaluation reserves. So that one too will get 40% of the 1,002. Then that one you put it in revaluation. Do you get the point? You don't put it in retained earnings, you put it in revaluation. Are you getting the point?
Yes.
Yeah.
Yes, sir. The
You
revaluation account. Okay.
you share retained earnings for NCI and retained earnings. Then you share revaluation reserve for NCI and revaluation. So you also say share of subsidiaries
Okay.
revaluation
NCR
reserve.
revaluation, NCR rating.
The parent gets what 60%, eh?
Yes, sir.
So 60%, 60% of 1,200. So this one will give me what?
480.
And this one will give me what?
720.
720. So when you finish the revaluation account, you finish, you can close it as 4,720. NCI, since what the NCI was measured using fair value, right?
Yes. So
So we
impairment.
share the impairment. So we share
Right.
the impairment. Then we also come and say share of impairment.
40% of 1,000.
So 40% of 1,000, giving you 400, right?
Yeah.
Then you also go here and share the impairment. Share of impairment, giving you 60% of what?
Level payment.
1,000. Also giving you what? 600, right?
Yes.
Now, when you do this, please hold on. Don't write anything. Wait, I'll give you time to write. As for the retained earning account, don't close it. Don't close it. Then you go back and check from
Check
your working ones.
unrealized profit.
No, don't do that. Don't do that. As a student, if you do that, you will ignore very, very important marks. Don't
Oh,
chew in your head. Your head is not a bank to store everything, eh? You have worked everything one after the other. So you go back to your workings and check from working one. Anything you have worked which affects consolidated retained earnings, then you come and put it there. Are you getting it?
yes, sir.
In order not to forget, don't chew things in your head. Oh. You worry yourself. You are going to write exams. You have a lot to learn. So don't make your head a bank that you are memorizing. Some of the things you need to write it down and come and refer. Are you getting it? So you go back to working one. Let me check. Now, in working one, group structure, nothing affects retained earnings. Working two, cost of investment. Now, do you see this deferred consideration?
Yes, sir.
Yeah.
Once you defer an amount into the future, it will bring what we call an unwound discount. Is that clear?
Yes, sir.
Yeah.
Yeah. So, under normal circumstances,
10%.
I would have done it here before I move so that I don't forget. So I'll go back and then find the unwound discount. So let me go back and then work it here as working 12. Say unwound discount. On one discount simply means compounded interest. It's a professional term they use to frustrate you. It means compounded interest. Now you've deferred money. This is the money you deferred. The principal you deferred is what? 2,700. And then you deferred it for 1 year. Is that not it?
Yes, sir.
So, but you have operated for only 9 months. So you take only the 9 months interest. 9 months interest. The interest rate is 10%. So that will be 10% of the capital of 2,700. But for 9 months, so times 9/12. Are you getting it?
Mhm.
Are you getting it?
Yeah.
You know, 10% of 2,700 is for a full year, but you are operating for only 9 months. So you take only 9 months, giving you what? 203, right? Is it 203? Is it 203?
Yes, sir.
Oh, calculate for me. Is
Yeah,
it 203?
203. Yeah.
So you come here and then
20.
write it there.
That's 202.5.
Where we are
Over
rounding.
Yeah, it's
203.
rounded.
200. Yes.
So on one discount, it will affect, you know, it's interest. Interest will affect profit. You know that.
Yes.
So 203, you take it out. Let's continue checking our working. Don't write. Take your time. I'll give you time to write. I want you to understand. That's where you people, this is where you people make the mistakes. That's why I'm saying pause there and understand. So we've tackled this on one discount. Now, deferred consideration, that's what brought on one discount. We have done it already.
Hello, sir. Hello, sir.
But yes,
Before we proceed, so on the one you say what the on one if the question was post acquisition, then we are going to use the full year, like the one we did for depreciation.
I will
But once they
explain for
said
you.
within the
I will explain
okay,
for you. I will explain for you when we are done. Check working 4. Net asset, there is nothing there that affects retained earnings. Working 5, unrealized profit. You see here, it was the parent who sold, right?
Yeah.
So since it was the parent who sold, you agree with me that it will affect the parent's retained earnings. So this 240, you go back there and put it there and say unrealized profit. So you don't memorize in your head. That's why everything, I want to write it down on the question paper so that I don't forget. Are you getting it? 240. Then I go back. Let's check everything. Working 6, current account does not affect retained earnings. Working 7, intra-group loan does not affect it. Retained earnings of Paradise, that's what we used to do the net asset. Goodwill doesn't affect it. Impairment, we have already shared the impairment, right? We've already shared the impairment. NCI doesn't affect it, so we are done. So once you do this and nothing affects it anymore, you can now close your accounts, get a figure. So close all of them for me. Close all of them for me. I'm getting 19,200 for NCI. Am I right? Am I right? I'll give you time to copy these 3. So you add for me. I'll give you time to copy before we move on. Don't worry, I have time for you.
19,200 NCI.
So add the retained earnings and let's see.
Retained earnings is 14.
13,237. I'm getting 13,237.
Yes, 13,237 confirmed.
Okay, so write your solution. Let's balance the work, then I'll explain some things to you. I think you have all reached here, right? Hello?
Yes.
I think all of you have reached here, right? The rest, I'm not hearing your voices. Doesn't mean you are not part. Faustina and the rest, Mary.
We are part.
Irene
So
Kuga.
we preached here.
Well, Mary and Yawenko, are they asleep? Irene Kuga, Frederick, Ejin, are they asleep?
I'll be contributing. I'm here. I'm the one asking the questions.
7-3.
Now, where we have gotten to in this life, if you sleep plenty, you become poor. If
Hush.
you sleep plenty, you become poor. So sometimes when I see a student say they don't get time to learn, I laugh. Look at me. Me who is teaching you, I'll wake up at 4 a.m. and teach you. When I finish teaching you 4 a.m., I'll go and do my work. When I pay from work, I'll come and teach evening class again. 10 p.m. to 10 p.m. to 12 a.m. I also teach some foreign students online. So I will teach online and finish at 12 a.m. Then I'll sleep somewhere around 12:30 and wake up at 4. Look at the kind of work I'm doing. And so with all this, I still find time to do the things I want to do on my leisure time. So if you claim you don't have time, I also do politics too and all that. They all take my time, but still I find time to do what I want. So if you say you don't have time, it is funny. Are you sure if ICA was sharing $10,000 and they say every student is entitled to $10,000, so come for
Three,
you won't find time and go for it.
you will move.
That one, will you say you are busy? You will find time, right? Uh-huh.
Mm.
Because you need the money, you will find time. So if only you need the grade, then find time to learn. Well, in my life, if I'm dealing with you, even as a friend, and you tell me, if you tell me you don't have money, I will sympathize with you. Maybe we are going to do something, a venture, and you tell me you don't have money, I can sacrifice my money and do it because that one, the hands are not equal. Do you get the point? Somebody's salary is more than somebody's salary. So I can
Yes,
assist you.
yes,
You can assist somebody. But for time, God gave everybody 24 hours. Time is the only resource everybody has equal in this world. Everybody has 24 hours. So you decide how you want to use your 24 hours. Are you getting the point?
Mhm.
So
yes.
if you decide to sleep for 8 hours and wake up and say, you slept very well, you feel fine. You will feel fine. If you continue sleeping well, 8 hours, and say, anytime you sleep, you feel fine. On the day of the exam, you will feel very well.
Mm.
If you don't have time, then reduce your sleep time and learn. It doesn't kill. Go to America and see. People will close work, they will come and sleep for just 4 hours and they wake up again, going to another work. And that's why they are always rich. But in Africa, we are poor because we like sleeping. They put something in our mind that you have to sleep for 8 hours by force. Who taught you that? And some African doctors who don't understand says, hey, if you don't sleep for 8 hours, you do this and
Stress,
that.
stress.
Who told you that?
You get stress.
Who told you
They
that?
tell you you're
If you
stressing
want
your
to,
body. Yeah.
if you want to manage stress, there are ways you manage stress. If I'm writing ICA and still I've been sleeping for five hours, that's just for 3 months. After the 3 months, when you write the paper, you can decide to sleep for even 10 hours. If it is a Sunday and you are not going anywhere, can't you sleep and wake up at 12 p.m.? Will somebody chase you? But if you are writing ICA and you don't have time to learn, but you have time to do everything, today wedding, tomorrow outdooring, another day funeral, wedding, funeral, outdooring, choir practice, and that kind of thing. You are spending time on unnecessary things when your books are there, and I want it to come with a price. I tell people, must I always be in the church room every Sunday morning before I go to heaven? If I'm writing an exams and on that Sunday morning I have to learn, must I say no? I'm going to church. When you go to church and you come back, you have not learned, then you go and sit behind the paper and be praying that God should let you pass. God should let you pass what? What you have not learned. Is it possible?
No,
God is God. There is all of us, our Father.
that's not.
He knows the situation. He knows you are writing exams. 3 months after you've done intensive learning and you finish the exam, you can go to church and you yourself you'll be tired. But you cannot go to church on Sunday. Are you sure if the FR paper was Sunday morning, you will still go to church and leave it? You won't write it.
So
Assuming
please
I
go
see,
back. I want to take a shot.
I should go back
Yes.
to where? Which side? Working on my what? Which side?
Uh,
Okay, I should
Working
start from
on
one,
my
eh?
yes.
I should
Okay.
start from one.
Yeah, start from one.
Okay, you want to take shots so that later you can follow, eh?
Yes.
I think your network is disturbing you, so you've been going on and off.
Next, please. Next page.
Go and buy good internet package, eh? When I was can control iPhone. Are you fine?
Yes, I'm fine.
So I should go to the next one.
Yes, please. Okay.
Then there's a last one on one discount. Please, has everybody finished writing?
I want to take a look at the cost of investment.
I've given you that already in the first page. That's it. Please, have you all finished writing so that we'll fill the statement?
Yeah.
Yes.
Yes.
Okay.
So
Now,
you said you come back to explain the one this. I asked the question about the one discount. I said, it's
yeah, I'll come back.
after.
Relax. I'm on
Okay,
it. When we finish the solution, I'll address everything I've solved. I will explain everything.
okay, thank you.
Now, listen. If you are coming back to fill the statement, anytime the question asks you to prepare both P&L and statement of financial position, prepare the statement of financial position first. Are you listening? Fill the statement of
Yes,
financial
sir.
position first using your workings. So go to your statement of financial position. Open your statement of financial position. We are going to start with that. So open your statement of financial position. Now, working one, which is the group structure, it doesn't affect statement of financial position. Working two, which is the cost of investment. Do you see the share exchange of 21,600?
Yeah.
Yes.
Add it to the share capital. So you go to the share capital, you add the share exchange of 21,600. Let me write working two on top so that you remember. Then you move on. Now, you see the deferred consideration of 2,700.
Yes, sir.
That one and on one discount. You see, when you borrow money, at the end of 1 year, you pay the principal and the interest. Is that clear?
Sure.
Yes.
So it will become a liability. So because it's supposed to be paid within 1 year, it will become a current liability. So go under current liability and then open a bracket like this. So you come here under current liabilities, then open, call it deferred consideration. So write it there, deferred consideration. Deferred consideration. Then you open a bracket and put the principal of 2,700 plus the one discount of 203. Is that clear? Is that clear?
Yes,
Yeah.
sir.
Yes,
You
sir.
put the principal of 2,700 down plus the one discount of 203. So let me put this. This one is working 2 and this one is working 12. So that you remember. Are we okay?
Sure.
Yes,
So,
please.
So
I
the
mean,
deferred,
so
yes.
is it the share or the profit that we are adding, as in a 200 and two, listen.
The
20.
on one discount, the interest.
Okay, and that is what I want to get.
If you borrow money for 1 year, at the end of 1 year, what do you pay? You pay the principal plus the interest.
Yes.
So the principal is 2,700 plus the interest of 203. Are you getting it?
Sharp, sharp.
Okay. Then let's go to working for net assets. Now, the net assets, apart from you are looking at the reporting date. Look at the reporting date. Apart from the share capital retained earnings that you took from the question paper, there is a fair value property of 8,000. Can you see it?
Yes,
Yeah.
sir.
8,000 minus its depreciation of 200. So go to PPE.
You add,
Go to PPE and add it. So go to PPE and
you add
add
8,000.
8,000 minus the depreciation. So PPE, add 8,000 minus the depreciation of 200. Then there is revaluation of 1,002. Add it plus revaluation of 1,002. Are you getting it? Remember, there's a revaluation there, 1,002. This one, this revaluation is also on the asset. So you add it. Are you getting the point?
Yes, sir.
Sure.
Yeah.
So we finish with working 4. Now working 5. Working 5, unrealized profit. We have already deducted from the profit of the seller. 240, you go and deduct it from the inventory. So go to inventory and deduct that 240 minus 240 unrealized profit, working 5. Deduct that unrealized profit. Are we okay?
Yeah.
Yeah.
Take your time and do it one after the other. Current account balance. Go and deduct receivables of 2,400 and payables of 1,600. So I'll go to receivables and then I'll deduct 2,400. Then I also go to payables, which is a current liability. Then I deduct 1,600. Now look at how I treat the 800. Just look at how I treat the 800. The 800 is for the parent, so I'm supposed to add it to the bank account. But look at something. You see the parent didn't have cash here.
Mhm.
Yeah.
Can you see
Yes,
the
sir.
parent did not have cash here?
Yes, sir.
He didn't have cash, but he have overdrafts. Now, if you don't have cash in your bank account and you've collected overdrafts, when the year ends, any money that hits your account, what will happen?
They will take
That
it.
will take
Good.
it over there.
Very
Flow.
good. So you see why I tell you that you must understand the thing in real life. So the 800, under normal circumstance, we are supposed to add it to the bank. But because he didn't have cash and he has overdraft, it will reduce his overdraft. Are you getting it?
Yes.
Yes.
So if he has cash of, let's say, 200, you would have rather added 800 here. Is that clear?
Okay.
So do you know that adding 800 to assets is the same as subtracting 800 from liability?
Yes.
Good.
Yeah.
So if the parent had a cash here, let's say even 10 cedis, would have added the 800 here, would have said plus 800 here like this. Are you getting the point?
Yes,
Yeah.
sir.
But since he didn't have
Maybe
cash and he has
money in
overdraft,
the account.
what it means is that you don't have money in your account, you have overdraft. So at the end of the year, if the money falls into your account, it will reduce your overdraft. Are you getting it?
Okay.
Do we understand?
Yeah.
Understood.
Yes.
Let's go
So
to the
there's
next one. Yes,
situation whereby he had some cash. That is when you add up.
exactly.
Okay.
That's why I tell
Okay.
you that you need to understand the thing in real
The
life. So
tricks.
the mistake students made over there was that they have chewed in their head that
Yeah.
cash
Yes, so cash
cash
in
in
transit.
transit, it affects cash. When
Yeah.
they got there, they were all adding it. Not niyama. They were just
Hey,
Yeah, cash in
hey.
transit.
they were just adding keke and they are going. They don't ask to understand why
Okay.
you are adding, but they have chewed and they are just adding and adding. They
Yes,
will
that's it.
continue adding.
Hmm.
If you want to be a smart ICA student, don't chew. Everything, make sure you understand it in real life. So if the
Sure.
question is twisted
Yes.
slightly, you know what to do.
Yeah.
Yes.
Are we fine?
Yeah.
Yes. Thank you. Thank you very much.
Then we can go on. So we've gotten to working 6. Okay, now working 7, intra-group loan. You go to Paradise Loan, which is a liability, and cancel 1,000. Then you go to Kingdom's investment too. So look at this. If I come to the statement, now Kingdom's investment is here. That is here, the 10% loan note. Can you see?
Yes.
It's
Mm.
an asset. So I'll take 1,000 out in working 7. Then I also go to Paradise, the liability. You will see, under liability, do you see the loan here? 10% loan note.
Yeah.
Then I also take 1,000 out. Do you get the point?
Yes.
That intra-group, cancel 1,000 from the non-current asset investment, cancel 1,000 from liability. Can we move on?
Yeah.
Sure.
So the
Then
loan issue.
the loan, it is here. When you look at the working, I saw it here as intra-group. You can see intra-group loan. So I'm saying that it
Mm-hmm.
is a loan to one person and it's an investment to another person. So you go to
Good.
Kingdom's investment. Investment is an asset. So when you come to non-current assets, can't you see the investment here, 10% loan note? Can you see it here?
Yeah.
So you cancel the 1,000 from there. Then you also go to liabilities. Look at the liabilities, non-current liability. Can you see the 10% loan note here?
Then we deduct it.
Then you also cancel 1,000 from there.
Okay, that's fine.
If I give you a loan, for me, who gave you the loan, I'll record it as an asset. Do you get it?
Yes, yes.
But you who took the loan, you record it as a liability. Are you getting it?
Liability.
So now that we are coming together, every intra-group item must be cancelled from the financial statement. So I will cancel 1,000 from my investment. Then you also cancel 1,000 from your loan. Are you getting the point?
Yeah.
Good. That's what it means. Now let's go. Okay, Paradise Limited retained earnings. That's what we use to do the net assets. Goodwill. So go and report your goodwill. 11,300. Go and report your goodwill. 11,300. 11,300. Go and report it. Let's move on. NCI, go and report 19,200. NCI 19,200. Revaluation is 4,720. So report NCI working 10, 19,200. So you can see clearly here. Where is it? NCI working 10, 19,200. Now the revaluation surplus working 11, 4,720. Are you getting the point?
Yeah.
Okay. 4,720. Let's move on. Let's move on. Now,
236.
retained earnings. Retained earnings is 13,237. So go and enter that one too. 13,237 retained earnings. 13,237. 237. Are you getting it? Are you getting it? Please, is everybody on course?
Very, yeah.
If you have done that, then now
Yes, please.
our workings is finished. It means we finished with the statement of financial position. So let's close it. So let's close it and balance it up. PPE, close it and sum it. Before you sum, close the bracket. 2 or 3 people should sum it and confirm the figure so that we can move.
Yeah, PP 67,000.
Somebody says 67,000. Please confirm for me. I'm getting 74,200. Please check your figures
Yeah,
here. 37,000.
yeah,
I'm also
74,
getting
74,000.
74,200.
74,200.
Please, if your calculator is not good, buy a good one. You go and put wrong answers down, you'll be shocked. 10% loan note. Close it.
1,000.
1,000.
It's 1,000.
Inventory. Close it and report. 8,600 plus 2,400 minus 240. That's 10,760. Are you getting that?
10,700.
760.
That's 760.
Receivables. Close it and report. 12,000.
12,000.
12,000. Bank. 600.
600.
So this will give you the total assets. Let's go. Share capital. When you add it, it's 41,600.
600.
10% loan note.
6,000.
1,000. Trade payables. 6,800 plus 7,200 minus 1,600. 12,400, right?
12,400.
Overdraft.
3,200.
Overdraft.
2,800.
2,800.
2,600 or 2,800.
2,600.
You are accountant. If you are an accountant and you are adding figures and getting it wrong, then there's a problem. 5,600 plus 1,600.
7,200.
7,200.
Then deferred consideration.
2,903.
2,903.
So check if we have balance. It should balance. All my console should balance. It never solved control and it shouldn't balance. Wow. So add them up. 11,300 plus 74,200 plus 1,000 plus 10,760 plus 12,000 plus 600. I'm getting 109,860.
109,860.
Let's check the equity and liabilities. 41,600 plus 47,20 plus 13,237 plus 19,200 plus 6,000 plus 12,400 plus 2,600 plus 7,200 plus 2,903. 109,860 balanced.
Charlie.
So once it has balanced, I'll go and transfer the result into my P&L. Please ensure that you balance at 109,860.
2,0960.
Are we fine?
We are
Yes, sir.
fine.
You're fine.
Then let's go to the P&L. So the P&L too, you're also going to check your workings. I don't want you to forget everything. So anything you are doing, you check your workings one after the other. So let's start the workings and apply it on the P&L. So this is my workings. I'm starting. Can I start?
Yes.
Working 1, which is the group structure. It affects the P&L. Now the 9 months, it means it's less than a year. So all the figures of the subsidiary multiplied by 9/12. So let's go to the P&L. Every figure of the subsidiary times 9/12. Every figure of the subsidiary times 9/12. Any figure you see of the subsidiary times 9/12. Any figure times 9/12. All figures of the subsidiary times 9/12. anything you see belonging to the subsidiary times 9 over 12. I think I've done that. Are we fine?
Yeah.
Every figure of the subsidiary times 9 over 12. Are you okay?
Yes, sir.
Let's go to working 2. Cost of investment. It doesn't affect the statement of profit or loss. Working 3, deferred consideration. It doesn't affect statement of profit or loss. Working 4, net assets. The asset and liabilities will not affect it, but the depreciation, the expense here, the depreciation. Can you see?
Yeah.
Can you see?
Yes.
The 200 is a cost. So go and add it to cost of sales. So go to cost of sales and add the depreciation of 200. So cost of sales plus 200. Depreciation working 2. Sorry, working 4, eh? That's working 4, eh? 200. Working 4. Can we move?
Yeah.
Yes.
Let's check. Working 5. Unrealized profit 240. It's also a cost on inventory. So add it to cost of sales. 240. So add it to cost of sales again. So plus unrealized profit 240. Add it to cost of sales 240. Go ahead. Are you okay? Are you okay?
Yes.
Let's go gradually. We are getting there. Working 6. Current account does not affect P&L. Working 7. Intra-group loan. It doesn't affect P&L. Working 8. Retained earnings doesn't affect P&L. Working 9. Goodwill. The impairment on the goodwill. The impairment of 1,000 is an administrative expense. So go and add it to administrative expense 1,000. Go to administrative expenses. Add 1,000 plus 1,000 administrative expense. Oh, lest I forget, let's go back to the working 5. Treat the administrative expense for the 1,000. Treat the 1,000 first. Add it to admin expense. Let's go back. Let's go back to the workings. Now the working 5, the realized profit. Come back here. Come back here to working 5. You see the sales. The sales figure of 5,400.
Yeah.
It's an intra-group sales. It's a sale to one person. It's a purchases to another person. So you cancel it out. So you deduct it from sales, then you deduct it from cost of sales. So like this, you deduct it from sales minus 5,400. So it's a sale to one person, cancel it out. And it's a cost of sales purchases to another person to cancel it out. Cancel it out. Are you getting it?
Yes.
Treat it in sales minus for 5,400. Treat it in cost of sales minus 5,400. That's why cost of sales, I ask you to use double line for the bracket because a lot of things go in there. Let's move on. Working 10. NCI does not affect P&L. Revaluation does not affect P&L. But the 70, you see the revaluation, the net assets. When we did the net asset, let's go back to the net assets. The 1,002 revaluation. Now go and add it to the revaluation. That's other comprehensive income here.
So please,
Yes.
you said we should deduct the 5,400 from the
Yes, from
sales.
sales and then from cost of sales. It's a sale to one person, it's a purchases to another person. So now that they are coming together, you cancel it. So deduct it from sales and deduct it from cost of sales. Have you done that?
Yeah.
Have you done that?
Yes.
Now, the 1,200 revaluation gain, add it here. The 1,200 revaluation gain. The revaluation gain of 1,200 in the net assets. You can now add it to OCI revaluation gain. So add the, oh, please, who is that? If your background is noisy, then mute yourself. Prince, if your background is noisy, mute yourself. Come on. Yes, you now add the 1,200 to the revaluation gain. Please, have you done that?
Yes.
Have you done that?
Yeah.
Good. Then let's go on. Now we've treated all these. Consolidated retained and it doesn't affect us. Now, the on one discount of 203 is an interest, it's finance cost. So go and add it to finance cost, the 203 on one discount. Go to finance cost, and add the 203 on one discount. So plus on one discount 203. Have you done that?
Yeah.
So if you've done that, let's close our statement. So the revenue, close it and sum. Please, if you are summing, multiply the one with the 6/12, the 9/12 first. So 60,000 times 9/12. Get that answer first as 45,000 before you add the rest. Is that clear? Multiply the one with the fraction
Yes,
first
sir.
before you treat the rest. I'm getting 164,800. Someone should confirm. Someone should confirm.
Confirmed.
Okay. Then cost of sales, close the bracket before you sum it. Multiply the one with the fraction first, 48,000 times 9/12 plus 91,600 plus 200 plus 240 minus 5,400. I'm getting 122,640.
Yes.
Is it confirmed?
Confirmed.
164,800 minus 122,640. I'm getting 42,160 as gross profit. Distribution cost 24,000, 2,400 times 9/12, then plus 4,000 is giving me 5,800.
Confirmed.
Administrative expenses 3,600 times 9/12 plus 7,000 plus 1,000 is giving me 10,700.
Confirmed.
Subtraction finance cost
603.
603 is a deduction. So there was no associate. So let's sum them. 42,160 minus 5,800 minus 10,700 minus 603. I have 25,057. I'm getting 25,057. Confirm that for me.
25,057. Confirmed.
Yeah.
25,057. This is my profit before tax. Then income tax. Let me close it. 2,000 times 9/12 plus 6,200. I'm getting 7,700. Confirmed.
Confirmed.
Yeah.
I'm getting 17,357 here. When I add this, I'm getting 11,200 here. Hey, 2,200. I think it's 2,200, eh?
2,200.
2,200. So plus 2,200.
The revaluation on the trial balance, it is
No. And
3,000.
then is what? On the trial balance was what?
The revaluation gain.
The parents' revaluation.
Yes, it was 3,000.
The parents' revaluation.
Parent, yes, the gain on revaluation of property is 3,000 for Kingdom Limited.
No, let me check. So where did I pick the 1,000? Let me check. In the P&L.
Yes, sir. The P&L.
Please, can you confirm that 3,000?
Gain on revaluation property.
No, that one is on this thing, balance sheet.
No, I'm not talking on the statement of financial position. In the P&L and the other
The
comprehensive
P&L is 3,000. Yes.
2,000. Yes, it's 3,000.
Yeah.
This, let me check. I'm not seeing what you're doing.
Again on revaluation.
It was 3,000, eh? Okay, so it means, please correct it. 3,000. So that's 3,000. Oh, okay. So where did I see the 1,000 from? 3,000. So that'll be
4,200.
4,200. So add it to this. 21,557. Did you get that?
Yeah, confirmed.
Okay, so yes, 21,557 is correct. Their solution, the 21,557 is correct. Now the sharing of the profit, you have to go and work that. So work that as a last working. This is how you do it. Let's go there. Let's go to our working and work it out. That will be your last working. 13. We call it NCI share of profit, NCI share of profit and total comprehensive income. Some people will work one and then they come and work the rest, waste of time. They are the same. So NCI share of profit and total comprehensive income. So you put profit for the year at one side, profit for the year at one side, and then total comprehensive income at another side. So done. Now look in the statement. The P&L, give me the subsidiary, is profit for the year.
4,000.
What is the subsidiary's profit for the year?
4,000.
So you see, for the whole year, it was 4,000. But we worked with him for only 9 months, right?
Yes.
So we'll take 9 months of the
3.
4,000, which will be 3,000.
Yeah.
It will affect profit. It will also affect total comprehensive income. Everything that affects profit will affect total comprehensive income. So put it there. Then now, there are three things you should use to adjust this profit. The first one is impairment. If NCI was valued using fair value method, what was the impairment?
1,000.
The impairment was 1,000. It will reduce this. It will also reduce this. It will reduce profit. It will reduce total comprehensive income. Then unrealized profit. Unrealized profit. If the subsidiary is the seller, remember this is the subsidiary's profit. So where the subsidiary is the seller, that's where you bring it here. The unrealized profit we had, it was the parent rather who was the seller. Is that right?
Yeah.
Is that
Depreciation.
right? Good.
Yes.
Then the fair value depreciation, which you have in your net assets. The fair value
200.
depreciation, which you have in your net assets. 200. It will affect this. It will also affect this. Is that clear?
Yes.
Then the revaluation gain. The revaluation gain. You know, revaluation gain does not affect profit.
40%.
It doesn't affect profit, but it affects total comprehensive income. That 1,002, you add it to total comprehensive income. Is that clear?
Yes.
You know,
The
revaluation gain.
revaluation gain of the revaluation gain of the subsidiary.
Yes, the subsidiary. Yes,
The
the one in the
40%,
net
the one we
asset.
did, the 40%. Yes. Thank you.
The post acquisition one.
Yes.
The post acquisition one, the post acquisition revaluation gain. It does not affect profit, but it affects total comprehensive income. So you put it in total comprehensive income. Then you adjust it. So adjust this 1,800 and then 3,000. Then I take the NCI share. NCI as for 40%,
Yes, sir.
NCI has 40%, so 40%. So take 1,800 times 40%. This is 720. And then 3,000 times 40%. This is 1,200. Are you following?
Yes. 1,200. Yes.
So put that down, then I show you how to treat it. Are we okay?
Yeah.
Yes, please.
Can we move on?
Sure.
Yes, please.
So you go to the statement. You go to the statement here. So profit for the year, NCI got 720, right? Profit for the year, NCI got 720. And then total comprehensive income, NCI got 1,002. Is that right? Is
Yes,
that
please.
right?
1,002.
So this
Yes.
is what you do. Profit for the year, give NCI 720. Total comprehensive income, give NCI 1,002. Then now you check your statement and bring the profit. The whole profit for the year was 17,537. Can you see here? 17,357.
Yes.
Yes. Yes.
So come and put it here that the whole profit is 17,357. Then the total comprehensive income was 21,557. Can you see? Can you
Yes.
see? So put that one to here,
Yes.
21,557. So the parent share is a balancing figure. 17,357 minus 720.
Minus
Minus
Then give
16, 637.
21,557
50 some.
minus 1,200. So find it and put it there.
So profit for the year is 16,637.
And this one, 20.
20. This one is
2357.
2357.
So this is it. So put that down. Then let me explain the key things and then we call it a day.
Please, I want to take a shot.
Okay.
So,
So, please, will it be posted on the YouTube channel?
Yes, it will be posted.
Oh,
Please,
thank
you
you.
want to take the shot from where? From where?
protein. Oh,
Like this.
mm.
This one.
Yes, please.
So, sir, let's just start from the consolidated statement of
Please,
the,
have
the
you taken?
balance sheet. Let's just start from the balance sheet so that we'll
Start
pick
from
all
the
the
balance
shots.
sheet. No,
Yes,
you don't
please.
worry. Take it here. Take it here one after the other. So take the
Oh.
first page.
So while they are taking their shots, the
Oh, no, I'm coming. Let her finish one after the other. We have
Next,
time. Let her finish.
next page.
Next, please.
Are you okay?
Yes, please.
Yes, please.
Can I go?
Yes.
Yes.
Yes, please.
This is the third page. Can I go?
Yes.
Can I go, madam?
Yes, please.
Okay.
Can I go?
Yes.
Madam, I'm waiting for you.
Yes, please go.
So when you get yours, respond to me.
All right. No, not from the workings, the last part of the balance sheet.
continue.
The last part of the balance sheet, you've taken, that is it.
Yeah, okay.
Okay. So
The
those who want
balance
to
sheet
ask their question. Now ask your question.
So, my
Yes.
question is, there is another way I solved the question that it worked. So, especially finding the share profit for the year, that is when you are sharing it, and the total comprehensive. Usually, what I usually do is I use the net asset schedule, the post profit, the total that I get. Let's say the total that I get, I less if there is impairment from it. Then whatever
The total
answer
you
that I
got
get.
the total you got is 2,800, right?
Yes, please.
Then you less impairment.
Which will give you 1,800, and I find the NCI.
So yes, the reason why you are doing that is that value, that 2,800, it has already taken care of the 200 depreciation. Are you getting it?
Yeah.
Are you getting it?
Yes,
It has
please.
already taken care of the 200 depreciation. So yes, you are right. You are right. This is when you understand what you are doing. But you see,
Okay.
I cannot teach the class with that method. It will confuse them. Do you get the point?
Okay.
You are right. When you do it, the examiner will mark it for you. You are correct. Once you understand that it is correct, because it has taken care of this already. So the examiner will mark it for you. But once I am in class teaching, I have to use the basic, the simple one that everybody will understand. You get the point?
Okay. Thank you.
Are you okay?
Yeah.
Yeah, so that's fine. You are right. Yes, the next person's question. Who is next asking a question?
Automatic.
Okay.
So
Previously, I asked question about the unwinding interest. When
Uh-huh.
I asked if maybe is if it's before at acquisition, that one is the 9/12. If it's post acquisition, then you use a full year, like the one you did
Now
for the
listen. Now listen. Now
depreciation.
listen. Now listen carefully. On one discount
Okay.
can never be at acquisition because on one discount, the interest will grow during the post-acquisition period. You paid the money at the date of acquisition. It was then that you deferred. So since you deferred the money, you've deferred it during the post-acquisition period. So it will always be during the post-acquisition period. Is that clear?
Okay.
But what I
Okay.
mean is that the
That's
interest,
okay.
the interest on it, you actually, you actually took a loan of 2,700, for example. The interest on the loan is 10%, which will give you 270. But this 10%, 270 is for a whole year. This is for a whole 1 year. Are you getting it? Are you getting it?
Yes.
But we are looking for
Yes.
only the post-acquisition one. We are looking for only the post-acquisition one. That is what we are looking for. So since the post-acquisition one is 9 months, you will then multiply the 9 months by the 270. Do you get the point? Do you get the point?
Yes. Yes.
So if it was
Yes.
a
Yes.
full
Yes.
year, if you've operated for 1 year, you wouldn't need to multiply by the 9/12. Are you getting it? Are you getting it?
Yeah,
Yes. Yes.
absolutely.
Yes. Yes.
If you had
Yes.
operated for a full 1 year, you would have taken the 270. Are you satisfied? Are
Yes,
Yes.
you
Yes.
satisfied?
Yes. Yes.
yes, please.
Who
Yes,
else
sir.
has a question
Yes,
to
sir.
answer? Who else has a question to answer before I wrap up?
I want
sir,
to see the
sir,
statement of profit and loss.
You want to see the statement of profit or loss? That's the whole statement.
Yeah, the whole.
Okay, so this is the statement. I think it starts from that is the statement. Yes. What's your question? You have a question there?
I've seen the figure. I wanted to ask a question on the 17357. Yeah,
That's
I've
it. It's
seen it.
the profit for the year, and then the total comprehensive income. You take those figures and put it here. You take those figures and put it here. So now that you know the NCI figure from your working already, you can find the balancing figure. Is that clear?
Yes.
Sir, I think I mixed one class, but I don't know whether you've done an associate.
I think they treated them as associate before I came, but I'll find one question that involves associate again and treat it with you. Now, listen carefully.
Okay,
If
brother.
you are committing yourself, look, listen carefully to me. This rush hour that you are doing, 4 a.m. to 6 a.m., it's not a small thing. It's a very, 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 very stressful thing. You know that.
Yeah.
You know that.
Yes, sir.
And
Yes.
I don't teach the regular class. I don't teach profs regular class. In fact, I don't teach for any school because of my position. I don't teach for any school. But I have been brought in to help you with the rush hour. Prof is my friend, and he has called me that, oh, Enoch, I beg you, help my students with the rush hour for them to pass. And so what it means is that from this January all the way till you write in March, I will be waking up at 4 a.m. and then be training you. I'm not taking a pesua from anybody. I'm not taking a pesua from Prof for doing this for you. It's a sacrifice
Yes.
we are doing for you just to
Yes.
make sure that
God bless you.
at least you'll be able to pass, and then the pass rate will increase and get out of the system. At least one day you recommend that, oh, there's one guy, Bishop, who taught us very well, and then we passed. That is all my reward is. It's a very big sacrifice I'm doing for you. So if I wake up to come and teach you and you don't come, then you are doing yourself a very great disservice. You know that.
yes,
Yeah.
sir.
You are being
Yes.
given something for free that will help you to pass. If I wake up and you
Something
don't
for
come to
free.
wake up, if you don't wake up to come and learn, then you are doing yourself a very big disservice. Imagine you are not able to understand that associate again. You go to the exam, so and unfortunately it is there. Do you see how you've cost yourself?
Sure.
So sometimes the kind of things that causes students not to pass, some 30 minutes, something that you could have used 30 minutes to learn, students will ignore it, yet they go to the exam, so and the thing is there. And so I tell students, so far as you are writing exams, this CA course is the most difficult professional course in the world. Are you aware?
Yeah, it's very true.
ICA is the most difficult
Sima.
professional course
Hey,
anywhere.
say Sima.
Oh,
What about
Sima, what do
Sima?
you mean by that?
When,
Forget it. It is not difficult at all. Look, if you have ICA, if you
hey,
qualify ICA, You know, Sima, you are writing only one paper. Are you aware? Are you aware when you charter ICA,
Okay.
Sima, you write only one paper?
No.
Oh, you write only one
Okay.
paper, only their strategic case study. Yes, only the strategic case study.
Wow.
So
Okay.
when you see that we all qualify and within a short time we get SEMA and all that, it's a short period. If you have ICA, you write only one paper, that is their strategic case study. And then the ICA case study alone is about 80% of their strategic case study. So if you even finish ICA this diet, no, you can just register SEMA the next diet, you just pass at once.
Okay.
Very, very, very easy. Look, you see the management accounting paper you have been writing, eh?
Yeah.
It's a
Yes.
it's a combination of 4 ACCA papers. Are you aware?
Hey.
Look,
So that's
ICA
how
has
we did the
combined.
pass rate is there now.
Now listen, management accounting consists of cost accounting,
Yeah.
and then managerial accounting itself, and then decision making, and then what we decision making and what we call there's a performance management.
Yeah.
So ICA has taken 4 ACCA courses and I've put it together to become the management accounting. So that's why at a point in time, it became so much that they have to split it into two and give part to the level ones at introduction to management accounting before level 2, management accounting. So a course that you are seeing is introduction in level 1 and then the same course in level. It tells you that it's a very difficult course. That is the paper with the highest failure rate. Are you aware?
Yes, sir.
So when you are
Yes. Yes. Yes.
writing ICA, so when you are writing ICA, don't joke. When you are writing ICA, don't joke. If you are writing ICA, don't joke. Don't joke. Make sure that you put in all your effort and everything because the least thing you slack, you have to come back and write again. Now, I have had a particular stubborn student who doesn't come to class, and for all the period he studied FR, he simply didn't know how to share this. He didn't know how to do this. This easy thing I have taught you. Look at the approach I've used to teach you this. This one. Everything that affects profit, it also affects total. And there are only three. This is the thing. There are only three. When you take the profit, when you take the subsidiaries profit, it is fair value depreciation, which will affect this and then affect this. Impairment, that is if the NCI is fair value method, it will affect this, it will affect this. Then you have unrealized profit. That's if the subsidiary is a seller, it will affect this, it will affect this. Then if there is any post-acquisition revaluation gain, you add it to only the period. Just this, and then you take the NCI share. Don't you see that everything here is the same thing here? It's
Yeah.
only this that we've introduced.
Yes.
So this is something simple you should learn. He was not coming to class. So throughout the period, he didn't know how to do this. He was not coming to class though, but because he's a very good student, he understands console and then the standards. But because we were not coming to class, he was limited. When he wrote the paper, he got 49. Imagine if he had done this, he would have gotten all these ticks to make it the 50. He wrote 4 times before he was able to pass. He wrote 4 times before he was able to pass. At the time when he calls me, he's my friend. At the time when he calls me and say, "Oh, Bishop, Charlie, you know, go help me." I say, "Oh, me, when you didn't have time to learn, you think me, the lecturer, have time. You, the student, rather, you say you don't have time. And then me, the lecturer, you think you have time. You, the student who is writing the paper, you say you don't have time to learn. And me, the lecturer who doesn't need the paper for anything, you think I have time?" And so that is it. Some opportunities come only once in life. And so I'm watching the rush hour, the management accounting students. Those of them who have been sleeping and have not been joining in the morning, you should take note that is a very big risk you are taking because somebody has been brought from elsewhere. You think Prof just called anybody at all to come and solve the rush hour with you? You think he just called anybody at all? He knows what I'll do. And that is why he brought me in. You can testify. If you look at even the approach I use in presenting the solution for it, doesn't it make it extra clear to you?
Sure.
That's correct.
So I am doing this just to make everything clear for you so that you get real life understanding of the processes. Look, this particular question I solved with you. Do you know it contains everything you are supposed to know in console?
Yeah.
This
Yes, sir.
particular
Yes, sir.
question I've solved, it contains everything. The
Yes.
only thing that is not in is associate, but it contains everything.
Associate. Yes.
So the 3 questions I solved with you, November I solved November 2019 with you. Then I also solved May 2020 with you. and I've also solved November 2020 with you. We will hold on here and start practicing preparation of financial statement. When we get to the revision week, Prof will organize some intervention for you, and it will bring me on to help you with financial reporting and management accounting, at least for the
Yes,
level
sir.
2, and then PSE for the level 2. He will bring me
Okay.
in to help you with this for the level 2. During that time, then the other petty things you are supposed to know on console don't know, then we tackle them. That is not the time when you get there. Somebody will say, I don't know how to treat unrealized profit. Are you serious? Are you serious? That 1 week, 1 week to exams, 1 week to exams, you don't know how to treat unrealized profit, and you are going to sit behind the paper. What do you expect? So I am doing this now so that in the course of the 3 months period, keep on revising and preparing yourself, arm yourself with these things so that you get 80% understanding of the whole syllabus. If you have 80% understanding of the whole syllabus, when it gets to intervention, then we'll add some of the hidden facts to you. That one, you don't need to forget. You keep them at your fingertips, just waiting for about 1 week to the exams. And then that will be more than enough for you to get 50 plus marks and pass. Therefore, if you don't take it serious, and at the end of the day, you don't pass, maybe you will not see me again teaching you rush hour next diet, or you may not have this opportunity again. So if the opportunity is readily available now, take advantage of it. All said, a word to a wise is
So,
said enough.
another
Yes.
one.
Enough.
There
Yeah.
was a question I saw. It
Mm-hmm.
seems with the consideration, usually we have the cash, the deferred
Mm-hmm.
share, but that
Yeah.
question had a transfer of a piece of land, which was
So
added.
good. So that question is, I think it was in 2022, right?
Yeah.
It
Yes.
was, I think, May or November 2022. So send that paper onto the platform. We will
Okay.
tackle it the next time. What happens is that if there is a transfer of a piece of land, now watch, you are going to buy something. You are going to buy somebody's property. Let's assume you give the person cash of 40,000.
Yeah.
And then you don't have money to give the person. So you are giving the person your land. Don't you value the land at market value?
Yeah. Sure.
So if
Yes.
the land is 30,000, the carry amount of the land is 30,000, but the fair value is 50,000. It means it's the land, the 50,000 that you add. Do you get the point?
Yes.
Okay.
You are buying, it's like swapping. If you are swapping your phone for somebody's phone, don't you value your phone before you add some money to it?
Yes.
Yeah.
So that is it.
Yes.
You are giving the person a land. So you find the fair value of the land and give it to the person. Now, when you find the fair value of the land and you give it to the person, in your PPE, your land, that is what you've given to the person. So it means your PPE must reduce by 5,000, 50,000. But the question will tell you whether it has been treated or it has not yet been treated. Are you getting the point?
Okay.
Yeah.
If the question tells you it has been treated already, then you don't deduct it there.
Yes.
If the question tells you it has not been treated, then you need to deal with it. Are you getting it?
Yeah.
Okay, so you throw that question on the page. I think that question was in 2022 or so. Throw it
Yeah.
on the page.
Okay.
So share
And
it on the page,
okay.
and then
And then
we'll discuss it.
proportionate. I don't know whether our next time you just brush through in case
Proportionate,
fair value
pro-
doesn't come.
proportionate share of NCI. This is what happens. If they tell you, is everybody listening carefully?
Yes, sir.
Perhaps this man will be a
Yes,
prophet. So
please.
let's listen. If they say the kingdom group, the kingdom group values NCI using the proportion of net assets method. Proportion of net assets method. That one is even more simpler. Proportion of net assets method. What it means is that if you are doing NCI, you take the NCI at acquisition.
Yeah.
For example, here, if they were using the proportionate method, you go to the net asset like this. You see the net asset at acquisition, the 30,000.
Yes.
It means that NCI will be, in this case, NCI was 40%. It means it will be 40% of the 30,000,
Okay.
which will be 12,000. That's the value. This is
Yes,
how
sir.
you calculate NCI using proportion. Now, when you do this, the implication is that for impairment, only the parent will take the impairment. Only parent takes the impairment. You don't share the impairment.
Yeah.
The reason is that, let me explain this. The reason is that Now, when we say fair value method, what do you understand by fair value? The word fair value means what? Market value, right? Right? So if NCI is
Yes,
valued
market
using
value.
fair
Yes,
value,
the market.
good. If NCI is valued using fair value method, it means that the parent paid for goodwill, the parent paid something extra for goodwill, then the NCI also paid something for goodwill. Are you getting the point? They all paid the market value. So both of them paid for goodwill. So if I bought something with you, you bought goodwill, I also bought goodwill. If there is an impairment, don't we have to share?
Yeah, you should.
You paid for goodwill, I also paid for goodwill. So if there is an impairment, you will share. That's why you've been sharing the impairment for the fair value method. But the proportion method, it means only the parent paid for goodwill. If you are using proportion method, it means only parent paid for goodwill. So if only you have paid for goodwill, if there is an impairment, do we share?
No.
You will take it alone. Are you getting the point now?
Yes.
You see, proportion means that he paid, the NCI paid exactly what he was supposed to pay. So he didn't pay for goodwill. So if he didn't pay for goodwill and only parent has paid for goodwill, if there is impairment, then only the parent will take all. But if NCI is valued using fair value method, it means the NCI paid for goodwill, parent also go paid for goodwill. Therefore, if there is an impairment, they have to share. Do you understand it now?
Yes, please.
Do you get the understanding now?
Yes, please.
So I believe it's 6 o'clock now. We'll meet
Yeah.
again. When is the next FR meeting?
Today,
Yeah.
today, Monday morning. Today, so Monday morning.
No, the point is that the
Tomorrow.
FR and CR was given the same time. So you have been alternating in that order. So when you do one FR, we do one CR. So when we get to standards, because the standards is both FR and CR, it will come together. So what we'll do is that I'll discuss with Prof whether the Monday tomorrow should be given to the FR people or CR people. So before afternoon by 3 p.m., he will respond and I'll notify you on the page. It means
Okay.
that if I notify you and you are meeting tomorrow, it means that you even stand a better risk. You must try to revise all this and understand before tomorrow. Because if you haven't revised it, then they come and add more to it. Am I not rather killing you?
Yeah, killing.
Yes,
So
yes.
you need to revise and understand it well. You need to revise it and understand it well. Then we come and top up. So I will encourage Prof to share this video on your YouTube channel for you as soon as possible so that you can take advantage of it. All said and done, I think we have had a good day. On that note,
Thank you,
we'll meet
sir.
again probably tomorrow. Till then,
Thank
Yes.
you.
may the good Lord be with us
Thank
all.
you. Have a
Also
nice
be
day.
with you.